Hello, Scott. Thank you. Hello, Andy.
Hey, Steve. Hey, Scott.
Hello, everybody saying hi in the questions box. Welcome to, excuse me, the trade of the week, our typical Tuesday afternoon after the market closes webinar. This one focuses on, the trade of the week, but we always delve off into other avenues as well. And this week should be no different. Obviously, you see my screen, so that's good. Otherwise, Andy would be telling me I don't see your screen. We're on the disclaimer page here just to remind everybody that this is not a solicitation for investment or buying or selling recommendations. If you're looking to work on your own personal finances, you got to talk to the brokerage guys, the ones that pass the fiduciary responsibility tests. So we're content providers, software as a service, and we're going to show you a lot about our technology and a couple of opinions, of kind of what's been happening in the market lately. And we'll talk about the trade of the week and why that particular trade or non-trade was selected. But making the lawyers happy, just reminding you all that this is not a solicitation for any investments. All right. So always like to spend time on this slide, especially for the newer people who don't have a subscription yet. If you're thinking about it, just know that we've got a great onboarding process here for new subscribers. The main focus is the live trading room. On the right here is a screenshot of Barry Anderson's live desktop. He's using Trade Ideas. He's trading his own account and is moderating a room of about 400 to 500 people. And it's a free chat room. We may be putting some of those chat rooms out of business out there because this is a pretty solid core group and free is a great price. So every day of the week, you don't have to be a member of Trade Ideas, but you can join the free trading room and kind of kick the tires and get even more of a feel for what this technology and software is all about. Additionally, there's some really, there's a few really good traders in there that have earned their keep with some of their calls. And so it's a good community. We have 4 webinars a week like today. Yesterday was Jamie, myself. Today is myself and Andy. Tomorrow is the CEO, Dan Merkin and Brad Williams, where they kind of give you a sneak peek at what's coming around the corner. Those 2 guys are usually in the lab, working about 3 months ahead of everything that you guys see here. So it's always interesting to hear what they have to say. And then Thursday is Andy's day. He and Jamie take the trading studio. All of them are at 2 p.m. Eastern time. Now notice down here at the bottom, this is a great one for somebody who just signed up and maybe still has some questions. You watched a couple of videos, but you'd like some live support. We use the GoToWebinar format, just like you're seeing right here, right now, with the questions box and the sharing of the screen. And at 11 a.m. to 2 p.m. Eastern, every Friday, we are opening up the desktop, and we got all the guys in there, myself, Jamie, Andy, and Sean, to help either type questions or demonstrate answers and workarounds on the screen for you. So if you're still feeling like there's a lot to learn and you're a little behind the curve and you you have a quest for more knowledge, these Friday support sessions are definitely the place for you. We still do one-on-one sessions, but I'm going to just kind of give you a little heads up. That's going to be dropping by the wayside soon. We're getting too big to be spending one person on the phone with one person. So we're going to be going to kind of a college 101, 201, 301, and advanced 401 group training going forward. So that's not going to happen for a month or two, but more on that later. But again, you're not alone with Trade Ideas. We are here to help you absorb the learning curve and try and get you up to speed as quickly as possible, because we recognize this is a very powerful program. Subscriber growth. Well, we're going to have to update this slide because we are up here in the blue section now. Everything that I just mentioned on that last slide, I think, continues to help us hold subscriber growth and customer satisfaction. We're pretty much on our highs in terms of all the metrics, revenues, and new accounts. So we feel like we're clicking on all cylinders, and very, very pleased, and have all you guys certainly to thank for that. And the use of the product certainly shows up in these metrics. Just a quick AI introduction here on that timely chart. It's also when I started, I came on the payroll with Trade Ideas to help them absorb the growth that was coming and the expected growth for the AI. So enough of that. I still have to talk about Brokerage Plus, which is not for new users and not for new traders and newbies. This is for experienced and intermediate traders. and people who also have a good grasp of how to use the Trade Ideas product, because it's up to you to come up with your own custom scan and strategies, and you can trade automatically using Interactive Brokers through our Brokerage Plus tool. Right now it's still in beta, but very soon it's going to come out of beta, and there will be a probably a one-time licensing fee for that. Let's see, where should we go from here? All right, man and machine combined. Just a quick reminder from Paul Tudor Jones that no man is better than a machine, but no machine is better than a man who also has a machine. And that's what we like to consider ourselves here at Trade Ideas. Human beings, traders with a machine that is rather impressive. But we'll get to that in a minute. The agenda for today is going to be a little light. I think given the craziness that we've had in the last week, there's a lot to talk about kind of outside of, the trade of the week and building a new scan. There's a lot of new traders that have been coming to the market, and I think Andy and I might even have a little bit of words of wisdom for you as well, and how to handle the volatility that we have. Holly, this is one of the few days in the last 2 years and 2 months that we've had, Holly, that there were 0 trades. And I think I'll go back and highlight the last time that happened, and we'll talk about that. Trade of the week, if you don't already know, was to sit on your hands and to accept that cash can be a position in times of uncertainty and volatility. And I think kind of maybe once we kind of work our way through and riff off the cuff on a lot of this stuff, if we have any time left over, we can do some questions and answers. So let me take the slideshow down and welcome you to my desktop. And let's see, let's get started here. Yes, if you have not used, David, if you haven't used your one-on-one yet, you could sign up for it. It's a bit of a wait right now, and that's one of the reasons we're going to the classroom schedule. So that's your call, but I'm telling you, if you can make those Friday sessions, David, I think you do make those. They're just as good. Okay, everybody, hello. Look at the trend that was absolutely broken. I really don't know where to start other than maybe where I left off last week, which was looking at kind of a break in the never fails. As soon as I start my webinar, the mow and blow and trimming guy shows up. Let me shut my window.
Well, to make you feel better, we don't hear it.
Well, I do. So where were we last week? A couple things. We looked at the price action, and we had this down candle, this first down candle right here, Monday, Tuesday, Wednesday, Thursday. Was that right? Monday, Tuesday, Wednesday, Thursday, Friday.
That's right.
Thank you. So we had this little dip down here on Tuesday, and I mentioned it in last week's trade of the week, and I also mentioned it last week and yesterday again in Jamie's office hours. What was very interesting to note was, as the SPYs were not really doing a whole lot here near highs, the VXX, as we all have kind of learned a lot about in the last couple of days, but the main one-to-one volatility index that's not supercharged 2 or 3 times over or inverted or anything like that. I'll call your attention down here, this candle. I'm going to zoom in on that candle right there. So this is where the market was, kind of just sitting at near highs, but all of a sudden, for some reason, the VXX was popping out of its range. So people were giving us an early warning of insurance buying on their portfolios. Again, if I line up with the spiders, it's pretty much this day right here, that red candle in the VXX was this green candle popping out. So I always found that interesting. Andy and I talk a lot during the day, and when we see that, it always kind of catches our attention. So that said, we went through the rest of the week, and we couldn't, as you'll notice, I've got the 10 period, 20 period, and 50 period moving averages here on my daily chart. Well, we sold off, and we never really got above the 10 again. The next day, we tried to get above. We poked our head above, but to no avail. We closed below the 10. And then the next day, we had a little wick, poked right up to it, underneath the 10-day moving average, and closed back below. Well, fast forward to Friday. Again, I don't want to get too deep into it, but this market was extremely technically overbought. I think you guys have heard me say on every metrics, Bollinger Bands, RSI, stochastics, whatever you want to use for momentum oscillators, this market was extremely overbought. But I also mentioned that markets can remain overbought or oversold longer than you can remain solvent as a trader, banging your head trying to get it to go the opposite direction. So overbought, oversold indicators are not always great, but they're just kind of a piece of the puzzle. But then we had some craziness come out of Washington midday on Friday, and the selling began. So basically, right here was us going into the weekend on this particular candle. And then opening up, obviously, yesterday. I'm going to go back to the intraday because it's kind of interesting to see yesterday's intraday. I'm going to scroll back to it and really highlight it. So yesterday, we had a little gap down. And this is what everybody has been conditioned for year after year in the buy the dip market. The old gap down, just buy it and hold on to it. But what happened once we filled the gap here, we were met with some incredible resistance, about a good solid hour of no trades above that line. And that starts to become a very interesting scenario when you see that the gap that was just closed cannot be pushed through. It basically closes the gap and then starts to roll back over. Well, as we know, that's actually my horseshoe alert. You can see the alert right there. Stocks that gap down and roll back over. And I had a lot of them yesterday, and I've had a lot of them today. But as I continue to bring in data here in the market, look at what happened. That's the old horseshoe rollover. Gap down, close the gap, and if you can't trade higher, and if you roll back to lows, well, I'll draw lows there for you on the open. Watch out. And we had some ugliness into the close yesterday. Well, today, same thing happened. Let me get to today's candles and zoom out a little bit. Same thing happened. We had a gap down. We traded through the gap down and into positive territory. But I want to show you guys something here, really interesting. I'm going to blow this up as much as I can. I've mentioned in the past that I don't like to typically use moving averages on my intraday chart. However, the 10-period SMA, Andy and I refer to it as the fast line, and I've called it the momentum line. So whenever you have stocks that are in momentum, either to the upside or the downside, the 10-period moving average on a 15-minute chart has always been a real easy guiding hand for me to kind of gauge the market bounce potential. Let me call your attention back to actually Friday. Here's last week I'm sorry, this was Thursday. So we closed below midday, and then we couldn't get back above it. So I'm just going to kind of highlight some of these touches for you. Here's a touch of the underneath 10-period moving average. There's a touch. There's a touch. There's a touch. A few touches. There's a touch. Close touch. Here's a touch this morning. And then you can see the price action was kind of painted into a corner until it finally decided at lunchtime that it wanted to break back above that. So my point in showing you guys this is I'll probably take it off when the market settles back down, but when you have stocks in motion and you have extreme momentum, and maybe some of you day traders that like to play the BOMO stocks, you may want to consider using a 10-period moving average, because whether it's going up in price or down in price, that 10-period moving average line is typically the guiding hand that plays the directional indicator as long as the stock is in a super momentum type of a direction. And then once it gets choppy like this, it doesn't really do much good. But where it really became interesting today was coming off the heels of yesterday, and then everybody thought, hey, here comes the big bounce. Well, I showed Andy midday, I said, hey, put a 10-day SMA on your 15-minute chart and look what just happened here. These two wicks could not get through it. Sold back off again, and it was under pressure again, and then just kind of painted into a corner. So for those of you who like to use momentum stocks intraday, that was the 10-day simple moving average, can sometimes show you a really nice guiding hand as to how the price action is really being held down or supported by. Big reversal candle today. Oh, one more thing I want to show here is on this. I'm going to redraw this stupid chart. Thank you. This orange line right here. You see, this was major resistance back then, back in November. We pulled back, and then boom, we pushed through. So the old axiom is intact. Prior resistance can become future support. Well, what's one of the other axioms we know we've heard about? Well, stocks can take the stairs up, and they can take the elevator shaft down. I mean, as of yesterday, the low, even after hours, all the way down to this orange line right here, It only really took us 3 days to wipe out about 50 days of upward movement. So here's a great graphical indicator that shows you how much stronger fear is than the emotion of greed. So not surprising where I was heading with that. Was beautiful, giant volume today. I mean, biggest volume spike in a long time in the S&P. And look at where we decided to bounce this morning. Looking left, kind of back here at that prior resistance level. So it looks like you know, we came into the Monday and yesterday with broken charts. I mean, there's just no other way to put it. Broken, other side of the mountain. Didn't matter what chart you pulled up, things were getting taken to the woodshed. But now that we've had a bounce at a level that makes sense, which was this prior breakout back in November, we've kind of established a possible new range perhaps now. So yes, we still have a broken market. It's like you plucked a guitar string as hard as you possibly could, and now it's just going to kind of resonate back and forth. And maybe we'll start to get some chart setups again. But for now, these charts are broken across the board. Let's take a look at the Qs. Bigger bounce back today in the Qs for sure. Huge volume, of course. And I would use yesterday's low, which was also corresponding to the breakout here in December, as a possible support level, about 158.30. And then the Dow, also a nice green candle push off of today. You know, when you've heard us talk about in down markets or sellers markets or bear markets, and I'm not saying that's what we're in, what we just had was a major correction. We'll see how it plays out. But the bounce backs, right, Andy, can be ferocious. They can be ferocious. And talk about that more in a second. Yep. Did you want to add something?
Well, no, I was going to say, Dayton, you know, there's an old saying that some of your best bull runs happen in bear markets, and there's a lot of truth to that, and there's a lot of logic to that, because not only do you have new interests coming into the market trying to pick a bottom, but you also have shorts who are covering that kind of add fuel to the flame, and that's why you get some really incredible bull runs in bear markets.
And you have conditioned buyers with big accounts that just have, it's been working for years, so why not just wait patiently and then jump in and attack? But will this candle in the Dow, will this candle in the Qs, will this candle in the spiders, where will we go from here? Are we just, is it just back to everything back as normal? I don't think so. I think a lot of damage was done. And I want to highlight on the daily chart here, look at how the 10 period is rolling over and getting ready to cross the 20. That's probably going to occur tomorrow, regardless of the price action. Here's my biggest fear, guys. I'm not making a prediction, but this is, I shouldn't even say fear. Here's my biggest, most likely scenario, guys. We have a few more days of bounce. But what's going to happen is these moving averages are going to roll over. And this bounce is going to do what's called a bounce up into the pocket. And the pocket is a pocket of resistance of declining moving averages. So it's too early to tell how much damage was done and what's going to happen from here. But guys, let me tell you what I'm going to be watching for the next 4 or 5 days. What is the price action going to do if it comes back up to meet these declining moving averages? That's where the real stalemate can occur. And, you know, I'm sure when that day comes, there's going to be a lot of resistance at those levels. The bulls are going to want to see a close above those declining moving averages. The bears will be certainly emboldened if we bounce into those daily chart moving averages and then roll over and close hard on lows. That's not what the bulls want to see. So I'm kind of giving you 3 chess moves down the board, but Andy and I have seen this song and dance many times, and that's really what you need to be looking for. Before I go any farther into this, some of you, you'll see at the end of the presentation, Scott's going to talk about it, but the guys here, the traders, Andy, Jamie, Steve, and Sean, and Andy, we put together an ebook, and we started doing this ebook probably back here as the market was just making new high day after day and day after day, and we quietly thought to ourselves, well, what would be a good content theme for this book? Well, we all agreed that this has been quite a run, and there's a lot of people who have never been conditioned in a bear market before, so why not write a book about what happens when the market does turn, because we're getting kind of overbought. And I've got a quick little image for you. Sean yesterday tweeted this. The Trade Ideas ebook is out, and it was released and announced on this day right here. So kind of chuckling to ourselves on the timing of that. Hopefully there'll be some good stuff in there. But the kind of thing that I was just talking about, selling their rips as they bounce back up into moving average and bounce back up into resistance levels, those are the areas where the bear market short sellers start to really get their foothold on profits. I don't know if we're going to be there. I'm just giving you guys a possible scenario of what could happen. Anything I left off the table, Andy?
No, you pretty. I'll add something. The one of the reasons this market has been conditioned now for over 8 years to buy the dip, and I was kind of surprised at the amount after that huge sell-off we had yesterday on extreme volume. The amount and the bounce we have. But then the more I thought about it, I said, you know what? People are now they're afraid they're going to miss the dip. I mean, let's face it. We set a record for the longest time ever going without a 5% correction, and then we almost turn around and have a 10%. I think it was in the spiders was closer to around 9%. But people they're also can be afraid they're going to miss. A lot of people have been waiting for a pullback, and now whether it's going to you're getting all crazy on me.
I know. I'm sorry. I was trying to set something up.
Oh, okay, no problem. I think Steve's right. I mean, and I mentioned it last week in mine. I said, guys, what we want to watch out for if these moving averages they do start to roll over, because then it becomes less constructive and a lot more work for the averages to get back to a constructive bullish pattern again. So it's going to take a little time. I don't, there'll still be plenty of opportunity on individual stocks. So don't feel like this is the dip. I got to rush in and buy, because just be patient, because it's more than likely it's going to take a few days to work off, and there still can be a lot of selling left. So.
Yeah. Well, as we segue into the AI, I want to, talk to some of the people who've been watching it closely. So this last week here was our test drive week, and Holly basically just was killing it, going long every day, printing money, making some good calls. But then right about here, on last week, beginning of last week, and all of last week, Holly, the AI, kind of went into hibernation. And what I mean by that was the trade counts were low. There's only 3, 4, 5 trades a day. The directional bias was mixed. There was no all longs or all shorts. The AI was trying a little bit of both. And the end of the day, profit and loss was, rather not significant, but there wasn't any big profits and there wasn't really big losses. It was just kind of a meh, kind of a week. And we hadn't seen that in a while. And it's interesting, obviously, in hindsight, looking back, but the last time I saw this, and this is what I was looking for when I was scrolling back, Andy, when was the last time you saw Holly not take a trade? What was going on in the markets?
That would have been Brexit.
Exactly.
I think. Yep.
Mm-hmm. Yeah. So the last time that we had Holly sit on her hands the entire day was when the market was going completely apeshit over Brexit. Thank you. Yes, you're right, Christopher. And again, the AI is our canary in the coal mine. If the statistically probabilistic machine learning device, which is now one of our most sophisticated scans and alerts and tools, is empty for the day, that's got to tell us something. And that was just today. And what I was saying is back here in these couple days, we only had 4 or 5 trades a day, and there was no real hookup. There just wasn't really any traction is the word I'm looking for. So AI spent a whole week of just spinning her wheels, which was kind of interesting because the winds were now, in hindsight, of course, it's perfectly obvious, but the winds were changing. And so I try to remind people, the bigger picture of Holly, how many trades are going through? Is it a long bias? Is it a short bias? Are there just a couple of trades, and long and short both? Is the AI confused? Is the AI seeing the market today? And all of those things should help translate into our actions and how aggressive we get or how confident we might be about our setups and our trades. So there's no trades to go through today, but again, the lesson is, Holly is the canary in the coal mine. Look at what we noticed. First thing I came in today, I said, oh my gosh, you're kidding me. After all of that, there was only one short strategy. And I can't argue. It is what it is. This is machine learning. I can't argue with machine learning. But it was a power hour short, which means power hour is the final hour of the day. And you all can see what happened in the final hour of the day. We had buyers step back in. So there was no way that the parameters would have allowed that strategy to trigger short. And then with the volatility and the gap down and the back and forth, the 3 longs, they didn't even have a chance. So my first notice of today was a low strategy count. And then as the day went on, Holly was just sitting on her hands, that's a tell in itself. And we're going to transition here shortly away from Holly and try and maybe give some of the newer traders some ideas of how to survive this type of environment. But right off the bat, there's a first tell. When the AI doesn't know what to do, that should be a pretty good red flag warning to the rest of us. Was there anything you wanted to add about the Holly segment, Andy?
No, there's not a whole lot to add. I mean, she's just very quiet. A lot of it has to do with the huge gaps too. A lot of the setups get kind of out of whack because a lot of her strategies are based on daily setups, and yeah. So we've talked about this before, but yeah, canary in the coal mine is probably not a I can't explain it any better than that. Probably.
Canary's on her back.
Exactly.
Today.
Yep.
Tomorrow's a new day, and there'll be a whole new set. And I would not be surprised to maybe see at least more than one short strategy in there tomorrow, given the amount of data in the last few days that have been.
More setups.
So the way I set the agenda here, we can kind of bounce around all over the place, but might as well go to the trade of the week, which is the theme of the webinar. And coming into this week, what I'll do is, if I can get it done, I can show you what we were seeing. I can't quite show you what we were seeing. All we were seeing was this red candle right here. So minus these red candle and green candle. And I've seen this before. And I immediately told Andy at the close on Friday, I said, I think the trade of the week is going to be to go to cash and sit on your hands, because the charts were breaking across the board. And it's a good teachable moment to remind people that you don't always have to be trading. Sitting on your hands or being in cash can be a position. And I also, in the same breath, hope that some of the newer traders didn't get too hurt yesterday and today, trying to continually pick bottoms and roll over to a new low, then buy again and roll over to a new low. That's a recipe for a really, really bad day. So, hopefully people were able to say, whoa, this volatility is a bit more than I was ready to bite off. How do we deal with that? We'll talk about that a little bit later, but going forward, again, the cupboard was bare. My trend change lubricant was bare, just like it is today. A lot of my other scans were bare, and we just have been around the block too long to know that finishing on a Friday on a giant candle with big volume like we had, these are the kind of moments that can be the kind of moments that we can remind people that sitting on your hands is not bad. I mean, I've got the quote. I'm not going to pull it up, but it's basically Jesse Livermore, who was one of the best traders in the early 19th century or 20th century, and late 19th century. He had a great quote that said, "I can honestly say, looking back over the years, that some of the best money I made was not by thinking, but by sitting and recognizing when the edge was not there, and recognizing that just jumping in and trading for the sake of trading might not always be the best idea." So, hopefully you guys read the email, and there's just a little bit of wisdom in there that you don't always have to be trading. And quite honestly, guys, I'm proud. I am proud of not trying to pick something and have everybody trigger and then get stopped out of it. I'm proud of the fact that we saw this early, and we basically told people to pull off the road and take a breather for this week's trade of the week. And I really don't know what else to say about that, unless Andy has something.
No, I totally agreed with you. There's, and you're right, and Jesse's right. Just I used to have that problem, because being a trader and trading for a living. No, trading for a living for basically almost 20 years, you feel like it's your job, and you have to be doing something, and really, until I learned that, listen, I don't have to be working. I'm working, but I don't have to be trading. I got I got to the point where I was actually thinking that, hey, I need to be trading to be working, but that's not true. Okay, you learn to jump in when you have a calculated risk reward, and not just to trade, just to be pushing buttons and thinking that you're working.
Jeffrey says the trade of the week was VIX. Well, in hindsight, sure.
There you go.
But Jeffrey, what did we have to work with, basically? Look at every time the VIX went up, and then it pulled right back and stopped everybody out. Went up, pulled everybody, stopped them back. Up, stopped them back out. We thought about it. But the VIX is really not something that I think investors and slower traders and swing traders should be playing in. So there was a thought, but it would have been chasing this green candle and seeing what it does every other time Charlie Brown tries to kick the football when Lucy's holding it with these wicks back here. That was in the back of my mind. Where do you call it? And what if it goes up and then ticks and then reverses hard? This thing moves fast. Okay, so I mean, I hear you. That could have been a good play.
This is a great topic, and I'm glad you brought it up, Jeffrey, because I wanted to point this out because there's very, very few times I will play VXX to the long side. But those times that I will, and if you look, pull up the spiders and look at January, okay? Look at that move the spiders had in January. Now pull up VIX, and let's see what VXX is doing. And trust me, this is a toxic ETF. So the real futures VIX was actually moving up higher than what the normal ETF VIX was moving. So anytime you see that, I mean, guys, if you're long, you need to have a quick exit in mind, because I told some friends and family, really pretty much almost at the top, I said, guys, be careful here, because the VIX is going up the whole time the market's going up. And what is VIX? VIX is a measure of fear. And why is it a measure of fear? Because it shows how much put buying is going on in the marketplace. Okay, people are trying to protect their longs by buying
insurance.
Exactly. So that tells you, people insurance out there, they have their finger on the trigger. It's gonna, they have their finger on the. They're scared. There's some fear coming into the marketplace, and a lot of times, you keep an eye. I like to just keep an eye on the VIX anytime the market is moving up to see if the VIX is moving down, like it does 98% of the time. But that other 2%, when it doesn't, it could be some opportunity there. So on the short side, or just be ready. Yeah.
And then on the other side of the coin, you have the whole VIX family, which is now the laughing stock of the market. Sure. People who basically got destroyed after hours. After hours, this one, XIV, went from 90s down to about 10 or 20 yesterday, and there's probably some class action lawsuits coming out on that. Mm-hmm. So the whole VIX family in itself is a really goofy ETF, and I just think it was a bit way too advanced to call for a trade of the week. But people were on it.
It's very, very dangerous. Yeah. But people have been shorting volatility for a very long time. It's a way overcrowded trade, and probably still is. So,
what's really sad, Andy, and everybody else is, just to shift gears real quick. I'm going to go to history yesterday. Look at how many of my 3-day bounces came through yesterday. I mean, I've never seen that many. Now we go through and we start looking at them. Big red bar fail. Big red bar fail. So all of these,
Steve. This was yesterday after the close. Yesterday.
Okay. These big red bars. This was all yesterday. So everything on this list is going to be stopped out when I run my next back test report. So basically, that's what I'm trying to tell you guys. Basically, this has been a nice 3-day hold back test report. But with all of these trades coming through, look at this. I mean, every single one of these is probably stopped out from yesterday, which sucks. But that just goes to show you how quickly on a dime things can change. If the market returns to buy the dip mentality, and we're able to take what we had on the bounce and the spiders today and consolidate, and then like I told you guys, as these 10 and 20 moving averages start to come into play, as the price comes up to meet them, that's where the real rubber is going to hit the road in this market, in my opinion. All right, so that was the idea, the concept behind cash. There was really nothing coming through our alerts. We didn't want to force a trade. The mandate of the trade of the week is not to call short selling. We could call long ETFs like SDS or other ETFs that are basically just going to mirror the market to the long side when the market gets shabby. But I think there was a teachable moment there on this Friday to go into the weekend and say, this is a time to pull back and let everything settle in to place. So we're going to need a few more days of data before I start to think that individual stock charts might start showing some interesting setups once again. And so I know, again, we're all kind of all over the place, but Andy and I talked also about maybe giving some tips on how to trade a market like this one. I mean, what can we do? Now, I'm not saying you have to sit on your hands. I know some people do want to get in and have some action and do some trades. So let's suppose you were trading 500 shares of stocks, at certain price levels last month, doing okay, in and out, doing okay. And all of a sudden, wham, Monday, Friday, and Monday. Our volatility has just exploded tenfold. So if you're still trying to play stocks that you were doing last month, right now with 500 shares, you're probably experiencing tremendous anxiety and whipsaw action, which will ultimately make you have bad decisions, force you out of a trade too quickly. Andy and I call it the market's really throwing elbows right now. So, I mean, if you want to give yourself some distance, the best thing you can do is downsize your share size. If you're trading 500, go down to 200. I mean, look at this volatility. You can still make money if you're right, and you can still, manage your risk if you're wrong. So when we always used to say when the volatility heated up like this, get small, like Steve Martin used to say, and get small. What else can we talk about really in this market?
Well, I think looking at the spiders right there, and a lot of people, like I said, are kind of brainwashed thinking, here we go again. It's another V bottom. We're going to just go back to highs. But you always have to remember, look at those little red bars. There was some major selling going on there. Somebody was, and I'm going to tell you something. There's not a lot of shorts in this market. The shorts have been run out months ago. And one of the reasons you have this kind of downside action is because when you don't have the shorts aren't there to cover their position. How do they cover their position? They have to buy back their stock. So you got to ask yourself, as you're playing this market, all right, sellers in the last week have come to the forefront. Are they going to come back? So, if we do bounce up in those pockets like Steve has talked about, okay, are the sellers going to come back? It's very likely they could. Time will tell if this is a major market top. Well, let's face it, the average bull market is 4.5 years, and we're going on 9. So we're due. We're due for a bear market. I mean, let's face it. And you're going to hear the talking heads talking about how strong the economy is. Don't listen to that. Okay, price is the only thing that pays, because the economy and the stock market are two different things. Okay, the economy hasn't been that strong in the last, I guess a year ago. Maybe it started getting better, but up until that point, the economy hasn't been that strong. But that hasn't stopped the stock market from going up. so just keep that in mind. Yeah, they're two different animals.
Market is forward-looking, and the economy is in the rearview mirror. Okay, let's see. Where was I going to go from here? I had a thought. Just that, as Andy was saying, yes, time will tell. I hope next week to be talking with some really nice data points, with some candles and these declining moving averages, so we can look and see kind of where we are in a few days. But I still think it's going to take us a few days to kind of figure out what direction this market really wants to have. And once the price action meets these declining moving averages, like I said earlier, that's where the rubber is really going to hit the road. All right. I would say we could look at charts, but I really don't want to, because so many charts out there are volatile messes, and I want to wait until they settle down. So maybe we'll save, that segment for next week. So with that said, we got 10 minutes or so, like I said in the beginning, for open floor. If somebody wants to ask questions, trade ideas, software related, market related, trading related, go ahead. The floor is yours, because that's pretty much all the content that we did have prepared for today. So. Wash sales. What about wash sales, Mr. Varley? Not quite sure. How do you handle those? Andy, do you have any thoughts on wash sales? I mean, it's going to be way too easy for me to say consult your tax accountant.
Yeah, definitely consult your tax accountant.
Don't insult them.
Don't insult them. No. Basically, he's referring to like what a lot of people would do, especially at the end of the year. It really only matters at the end of the year if you were to take a loss in a position, like a big loss for a tax write-off, and then turn back around and buy it like a week later after January 1st, and that's considered a wash sale, because you basically you're back in the same position. And really, through all my years of trading, what I would do, honestly, is I would just close out. I'd close out on it just makes it easy for taxes and everything. I close out at the end of the
Yeah,
year.
it really is
Just
the
make sure
easiest.
on December 31st, I'm all flat, and then I can do whatever I want to. And yeah, and
Makes
on
it a lot
back in
easier,
January, it really does.
especially if you're kind of a pattern day trader. It doesn't really, there's no skin on your, no
Hmm.
major issues, as opposed to a position or swing trader or somebody trying to avoid tax loss sales or avoid profit taxes. Yeah, so thanks for bringing that up. Somebody noticed, yeah, basically the
Sure.
trades of the weeks, they're washed out after a little bit of upside potential. They pretty much got washed out. And that's to be expected. The one that bothers me the most, quite honestly, is this one.
Trip. Yeah.
This, this was from the trend change lubricant. It was to be a short squeeze event, and it got caught up in the downdraft of the market, and then it had its short squeeze. So
Yeah. Wasn't stopped out by much either. Darn. That was.
no, it really
Well.
wasn't. So that's trading for you. All right, let's
Hmm.
see. The floor is still open for some questions here. What kind of scanners can you set up in the Trade Ideas platform? Sam, you can set up whatever you want. I mean, the real basic rundown is there's three types of scanners. There's the A window that's going to give me alerts in real time. This one is stocks making a short squeeze above the 52-week high. And with today, we only had one, VRT. Alerts are in real time. The top list windows, which I don't have a good example there, I'll find one for you. Squeeze me. This one looks for stocks going to new 52-week highs, also high short float. T windows update every 30 seconds, and they give us kind of a handful look at what's in play. And oh shit, I just closed that window. So here's what you do, folks. When you accidentally close a window and you don't want to go and find it, just leave Trade Ideas and say, no, do not save layout. And then basically run Trade Ideas again. And the window that I closed out will be right there. So those three alerts that I showed you, or the third one I was about to show you, is the M window. The M stands for multi-strategy, and multi-strategy basically means that we can put more than one alert in one window. And so the extreme volume high-low pro shows me stocks going down in big volume in yellow, and that was the last one today, and the ones that are going up in big volume are in green, so color-coded for up and down. If anybody is wanting some of these scans, I'm just going to make it real simple. You got to email info@trade-ideas.com and request, just say request the cloud links PDF. And that basically is a 3-page PDF that's got a bunch of different cloud links from myself, from Jamie, and from Andy. And that really is the best way, if you guys want to get some of these settings in your hands to do so. And I'll monitor the email tonight, make sure everybody that's requesting it gets a copy of that. So back to your question, what type of scanners can you set up? Well, these are our scanners. And then, once we have something that we want to trade, you manually trade or whatever you want to do in your own discretion. We also have something that we call price alerts. Price alerts allow us to look at maybe today's high in the spiders right here, right click, and just create a simple price alert. If the spiders tomorrow trade above today's high, that's now set. Additionally, for the newer users, you might notice we have channel bars over here. So I could come here to say this Alpha Predator channel, leave all my other windows for the moment and say, hey, you know what? I really like this Alpha Predator M window here. It's been spitting out some good stuff, but I don't want to sit on this channel. So all I do is I just right click and save it into my cloud library. And I could do the same thing on pre-market channel. If I really like the upgappers, well, I could save that one too. So there's many different ways to create scans or borrow scans or go in here to these channel bars and go shopping, as I call it, for scans. And then what I like to do is just load my default layout back up where all my other comfortable windows are that I can monitor, and I don't have to go back to those channels. I can just simply go to File, Load from Cloud, and whatever I grabbed on those channels using the cloud, I can bring into my mix up here, just like so. So, I mean, it was kind of an open-ended question. Hopefully I answered that, Ashraf. Let's see, is that the right one? Oh, Sam, excuse me. Okay. On high volume days, do you adjust your volume indicator for trading particular stocks? No, Marcia, I don't. I never really make any adjustments because I don't really know when high volume days are coming or high volatility days are coming. They just come and go as they please. And if my scanners have volatility and filter settings, I'll catch the ones I want. With this bear market, I don't know if I'd call it a bear market yet. I'm calling it the beginnings of a correction. Would you recommend sizing down our long-term positions? I think so, Nick. I think anytime, like I said earlier, when the volatility creeps up like this, getting small and slowing down your size is definitely a good thing to help protect you. Turtling, we used to call it, just turtle. Mm-hmm. Pull your head and your arms in and just wait for the storm. Mm-hmm. Okay, I read your ebook today. I was wondering if you have the links for the scanners mentioned in it. Yeah, again, David, if you want to name them by name, go ahead and send it into info@trade-ideas. A lot of those scanners were flipped, but I can get them to you. Just info@trade-ideas and be specific on the ones you want. But read the book, guys. I mean, it talks about how you can take a bullish strategy and then just with a simple click of the configure button, use this flip version, which will flip the strategy completely upside down. And sometimes that's all you need to do to get some decent quality setups to force yourself. And again, our brains don't turn on a dime. We continue to want to do what we have been conditioned to do, which is buy the dip. But once you start seeing alerts flashing at you, hey, you might want to short sell here. And if they start working, well, slowly but surely your confidence will start to turn. Ever since the trial with the premium account, the sound alert on my Trade Ideas Momo scanner stopped working. Any ideas? Lance, the only thing I would suggest is first double check that you are in fact having the actions playing the sound. If that doesn't work, sometimes just a uninstall and a reinstall, maybe of the latest beta version, might clear that out for you.
Yeah, that's what I try.
Favorite window to trade. Honestly, Jeffrey, I kind of like that squeeze me play, but I don't know going forward how well it's going to work because the squeeze, where is it? The squeeze me play is the method behind it is trying to exploit people doing dumb things. And what do I mean by that? Going short stocks with 44% the float, like ANGI. If ANGI gets back above this line right here, watch out. You might see a 3 or 4 day short squeeze. And I prefer longer term type trading over scalping and day trading. I left that behind a long time ago. So I really do like the squeeze me alert, but it's a two-pronged approach. It requires you and some evaluation. ANGI, decent. Not really say it's kind of a mess right there. Let's see what we got to work with here. Well, this one actually started its venture today into and there it is, VRT on my alert window, also showing up on the squeeze me. Basically, this was a short squeeze. Once it got through 52-week highs, it just took off. And that one's not applicable. That's obviously a merger and acquisition stock. So that's one of my favorite stocks because of the time frame that I like to look at. All right, we got time for a couple more. Whenever I move to another screen, I need to always click Window Show All to get all windows. If you're moving your setup to another screen, all you really want to do is take your toolbar and then maybe move it to the next screen and then click Save Layout or exit and click Save Layout. And I believe the next time you open it up, if you have tools and options and layouts, this thing right here, loading layouts, open relative to main window. So what does that mean? Well, it means what I said. If I move this toolbar over here and close down and save the layout, the next time I come to open it, this toolbar is going to open on my other window and it's going to bring all the other windows with it. And that also begs the question, how do you minimize and restore these windows, Steve, when they're all floating like this? It seems kind of counterintuitive and insane, but it's just a one click. One click of the toolbar minimizes everything. And then one click of the toolbar will restore everything. So if that was your next question, hopefully I headed that one off at the past. All right, Marcia, it just depends, you know, how long does it take for an alert? to go off before you jump on it. What's the market doing? What's the sector doing? What's the stock doing? One of the first things I look at is what is the 5-minute volume and the 1-minute volume doing? Are they above 100%? Hopefully by a lot. Those are a lot of things that all kind of come into play as a discretionary trader. Okay, let's see. Do we have an effective reversal scanner with settings that we can share? I don't know. Andy, do we have like a really good reversal scanner? Well, actually, yeah, it is the one. It's the 3-day bounce that didn't work very well yesterday, but let's take a look today. So what did we have today? I think just a few, maybe more. So this one, there's a reversal scanner. It's counting 2 days, red candles coming into today, and then closing, or excuse me, making new 5-minute highs throughout the day. So this is an interesting scanner. The 3-day bounce, VNQI, there you go, another possible reversal. One of the reasons I like it is because it has a component, and I'll show you here in the configure, that requires the 2 candles prior to today to be down. We call that consecutive candles. Your consecutive days, excuse me, 2, -2. So this stock was down at least 2 days in a row prior to the current day's signal. But again, this one is on the PDF. So anybody, again, that is interested in any of these scans, just send an email to info@trade-ideas.com requesting Cloud Links PDF, please, and I'll make sure that we get that out to you guys. I'm not sure about that, Armin, if you have to move the channel bar as well. I mean, ideally, the easiest thing to do, if you want to just do it, is just move the toolbar over, move the channel bar over, and move all your other windows over to your second monitor, then click Save. And then you're pretty much guaranteed that when you open it back up, it'll all be there on that second monitor together. Okay. I guess that's about it. Yeah, some people were talking about the sneaky options scan. That's not really something I have even on my screen right now to show.
Yeah, here's the deal.
Yeah.
We have a copy of it. When Bonpara released it, there was a little glitch in his exit strategy, and Brad actually had to write a custom formula for it. So we do have it. But it needs a custom formula. So I'll try to dig that up. You guys can send an email in if you want, asking for it. But just give me, bear with me, give me time, because I'll have to dig up that custom formula.
You might want to even address Andy by name, because he has that custom formula, and that custom formula actually has to be dropped into your account. So it's kind of a numerous step process. All right, so that's all we got. We got 4 minutes to the top of the hour, just enough time to let Scott come in and talk about the ebook and also what we got coming up this month and a few other things. So hello, Scott.
Hey, yeah, thank you. Couple items. First of all, we have a podcast. We've been plugging this for a while, and the audience is growing. Want to make sure that everyone that is not aware is aware, so that you can sign up. Just go to whatever application you listen to podcasts in and search for Trade Ideas Podcast. It should show up. Click on subscribe, and then you can also download some back issues. Get last week's episode on Friday. And then the next episode comes out this Friday, usually around midday or a little after the close. And then you have that all weekend to check out. Episodes are usually about 20 to 25 minutes. And it's good stuff. Get that pod. Good listening over the weekend. So we have that ebook that the guys wrote and we put out. It's very timely, considering we're finally starting to get some breakup in that bull market that's been going on for a long time. So download it. Just go to trade-ideas.com/ebook and share that link with your friends. They can get it too. Check it out. It's got good stuff in it. Again, easy to get. But the big announcement up next week, we're changing the price structure. Anyone that already has a subscription when the price changes doesn't need to worry about a thing. Their renewals will occur at the same rate they signed up at. So if you're in a 2017 rate at $188 a month for premium, you stay there even after the price goes up. but new subscribers coming in will be paying the new rate. So it's a good time if you're not yet a subscriber, you're on the fence by next week, you want to lock that in. I have a discount code for you now that if you want to go ahead and get started. And the code that's good this month for the Trade of the Week webinar is Love for Holly, and the letters are all caps. It is case sensitive. You can also download these cards on the handouts panel of the GoToWebinar interface. Just expand the handouts panel, click on the PDF download link. It's a blue link right there, and grab that. Use that code before the end of the month, but you're going to want to use it before the 15th because that's when the price change happens. So lock in those low rates using that code. Any questions about this, email us, info@trade-ideas.com. You can shoot Steve an email directly, Steve at, Andy is Andy at. Steve's at Today Trader on Twitter. Also follow us at Trade Ideas 1 and at Trade Ideas. Follow us on Facebook. Again, just shoot us an email with any of your questions. We'll have a recording of this webinar up tomorrow or later tonight so you can review it again. And you'll get a link to that in your email tomorrow or later on tonight. Thank you, Steve. Thank you, Andy.
All right.
Yeah, that's
You're
it.
welcome.
All right. Thanks everybody.
Guys.
Yeah, thanks.
See you all next time.
See you later.